the sheer fact that it would be easy to change would make it a worse document, even if you could change it for the better, because it means someone else can change it for the worse. So the fact that there's not been an amendment in decades, there's only been like 2 amendments in like 50 years, something like that, um, that's a feature, even though it can be a frustrating feature. And so I think that through education, people can realize why Bitcoin, specifically kinda stands out from the space, but it does take time. And the other I tend to emphasize Bitcoin and stable coins because kinda outside of Bitcoin and ironically, I mean, they started on Bitcoin, and they could come back to Bitcoin, but really the only other space that I think we're seeing a lot of kind of, utility from is the stablecoin space, which are really just dollars going into a crypto environment, making use of some of these rails in an international context. So for me, it's mainly the Bitcoin stablecoin discussion.
Many Bitcoin investors are still not sure how to feel about spot Bitcoin ETFs and the fact that big Wall Street firms like BlackRock hold hundreds of thousands of Bitcoin. The fact that BlackRock became interested in Bitcoin out of the blue last year has been a problem. After the ETFs were allowed, more and more people talked about the risks, but they are still buying Bitcoin like crazy. The BlackRock website says that as of fee, IBIT holds 141,142 ones. Tuesday was the biggest day ever for IBIT's daily intake. It got a record $52.2 million and traded a record $1.36 billion. It brought in 5% more money on Tuesday than the previous high of $4,931 million, which was set on February 13th. They also did better than Monday's overall net inflows of $19.8 million for all spot Bitcoin ETFs, which was not nearly as good as BlackRock's performance. Bitwise's ByteB came in third with $18.4 million, and Fidelity's FBTC came in second with $126 million. Demand for these goods is growing quickly. A well-known macro expert and financial strategist named Lyn Alden says that people shouldn't worry about Wall Street taking over Bitcoin through ETFs. Some worried people in the business world, like Cardano's Charles Hoskinson and Max Kaiser, may have blown the risks out of proportion. Not long ago, Alden talked to Unchained about her plans for the 2024 Bitcoin halving and what to watch out for as we get closer to the top of the cycles. Take a moment to like the video, subscribe to the channel, and turn on post alerts so you can see more videos like this as we play them.
Thing. And I think for a lot of people, we're still kind of in the blockchain, not Bitcoin, phase of discovery, which is a popular. I use that line because that was a popular sentiment a while ago. It's not quite that now, but basically, um, there's the idea that programmability is a good thing, with not necessarily understanding of the trade-offs, right? So, kind of if you approach the space and you're here for a handful of hours, your first thought is, okay, Bitcoin's old tech. These other things can do more. So by default, I should gravitate towards whatever does more or is more scalable and things like that. And it's not an insane thing that if you're here for a little while to explore that. And so that you get questions like, well, why not this? It's more scalable, it's more programmable. But a lot of people don't realize, for example, that Satoshi literally deactivated certain opcodes in early Bitcoin. He really made Bitcoin simpler on purpose, and that's something that is engineers can get that pretty readily, um, but it takes time to kind of explain that sometimes simplicity is better and that is actually a feature. And so with Bitcoin, because we optimize mainly for decentralization and security more so than features, um, that's the thing that's like there's a learning arc to that. Like you find Bitcoin, then you find all this other stuff, and then you kind of eventually after you explore the space enough, you realize why a really simple proof of work base layer is super important. And so my impression is that a lot of people are still on the earlier part of that exploration, which is fine. But that's generally how I see it. I think that one of the things to emphasize is that the simplicity is a choice. Like it was a design constraint. It was not like an accident that Bitcoin can't do more. Is a design choice by Satoshi and those who've continued the code since then, and the fact that Bitcoin is purposely hard to change by design, and that's valuable. Analogy I like to use is the U.S. Constitution. So the U.S. Constitution is an amazing document. We can all probably think of ways we could make it better. I'd like to add another 10 Bill of Rights, for example, to give even more freedoms to individuals or clarify and elaborate on certain amendments that seem to often be kind of ignored by laws. I'd like to kind of make it so explicit you can't ignore it, right? I can imagine ways I could make the document better from my perspective. But the sheer fact that it would be easy to change would make it a worse document, even if you could change it for the better, because it means someone else can change it for the worse. So the fact that there's not been an amendment in decades, there's only been like 2 amendments in like 50 years, something like that, um, that's a feature, even though it can be a frustrating feature. And so I think that through education, people can realize why Bitcoin, specifically kinda stands out from the space, but it does take time. And the other I tend to emphasize Bitcoin and stable coins because kinda outside of Bitcoin and ironically, I mean, they started on Bitcoin, and they could come back to Bitcoin, but really the only other space that I think we're seeing a lot of kind of, utility from is the stablecoin space, which are really just dollars going into a crypto environment, making use of some of these rails in an international context. So for me, it's mainly the Bitcoin stablecoin discussion.
Alden agrees that there may be some risks, but she sees these products mostly as the helpful tools. They say they are tools that will make it easier for older investors who are warier of cryptocurrencies and more trusting of traditional investment vehicles like ETFs to get into Bitcoin and the digital world. The well-known analyst also thinks that more should be said about more important problems, such as privacy and technologies that help smaller communities around the world adopt Bitcoin more quickly. During her interview, Alden also talked about the upcoming Halving event and how it would affect the price of Bitcoin. At the moment, the most popular cryptocurrency is trading above $60,000, which is less than $110,000 from its all-time high. As we get closer to April, most Bitcoin investors expect even bigger price changes, but these investors are only interested in short-term gains. Alden talks about how important the Halving event was in the long run. Here are some more interview clips.
That the average person is like, what are you talking about? Right? Like they don't know the market cap of gold, they don't know the market cap of Bitcoin, they don't know the relevance of that. If anything, the funny thing is you before you hit gold market cap parity, you surpass the US monetary base, right? So if Bitcoin is a bigger monetary right now it's something like the sixth biggest monetary base, which is base money, not broad money. Obviously, US broad money is way bigger than gold. But the if you pass the base money, that's I mean, that's a fascinating talking even if you're, like, number 2 or 3 up from, like, number 6 right now, whatever the number is. If you're up there with, like, China and Europe, in terms of, like, the biggest monetary bases in the world, that's fascinating, data point. Um, I think one of the biggest things is, 1, seeing it not die multiple times. So, most of us in the space have looked at the long-term logarithmic chart where you see all the cycles of Bitcoin. You have to keep in mind that most people have not seen that chart, right? That's in our echo chamber, we see that chart all the time. I think you even have that chart behind you with the colors. Like you can kind of see Bitcoin price on it to some
Exactly.
extent. So we've seen that chart and charts like it. Most people have not. They've seen the price rises that occurred within their conception of paying attention to it, which for example might have been the 2017 bull run and then might have been the 2021 bull run. So they saw a big bubble and then they saw another big bubble that was bigger and they often view it in linear chart. So it either looks like a bubble or a broken bubble, and they don't know that there's been prior cycles before that. And so I think people often wake up when they see like the third rise within their span of paying attention to the asset that they've personally seen, like it not die 3 times, for example. I think that's a big kind of signpost. Um, and another one is just that the relevance where the size matters is that when more people hold it, uh, and when it become when lawmakers are talking about it, I mean, certainly the size has caught a lot of their attention for sometimes good, sometimes bad reasons. Um, I think overall academics will be paying attention to it because it's a larger and larger asset and it's a larger and larger part of the discussion and it's not considered fringe. So if you read a research paper on it, you're not gonna like be told why you're working on that niche thing, right? It's like, no, I'm working on something that's the size of the US monetary base, for example. That'd be a relevant thing. In general, you don't see academics change their mind very often. Um, it's different than a business context. Normally, kind of people rotate out of the profession, one way or another, and other people rotate in, right? So I don't think it's a surprise that the professors that are working on that resistance money book are on the younger side of professors. I don't know their exact ages, but they're not, they're not gray-haired professors, even though ironically there's plenty of older people that really appreciate Bitcoin, but generally in the academic circles, new ideas or new things tend to come from the younger side of professors. So I think it's a lot of it's just rotating, it's just time. It's, 5, 10, 15 years of some people rotating out, more people rotating in, the asset getting bigger and therefore more normal to talk about, the Overton window shifting over time. That's generally how I approach it. Whereas business stuff, because you have kind of an objective measuring stick, of profit, that tends to pivot a little bit sooner than more, narrative driven or model driven or, intellectually driven types of work.
Still on news about ETFs, the latest update from Eric Balkuna says that Tuesday was a great trading day for the newborn nine. According to Eric, it was another very busy day for the nine, with well over $2 billion traded. In fact, IBIT broke its own record with $1.3 billion, which is more than most large-cap U.S. stocks trade. I'm not sure if this is the new normal or a short-term algorithm or arbitrage burst. It's also interesting that IBIT saw over 100,000 trades today. It was only doing 30,000 to 60,000 trades every day until Tuesday. It seems to have found a new gear over President's Day weekend. I thought it might have been pent-up demand from the long weekend, but it did even more today. They disproving that theory. It looks like, just like with Bitcoin, not even the experts can say what these Bitcoin ETFs will do at any given time. What they can say is that more money is still trying to get in, which means faster demand and more price gains. Do you think BlackRock is good or bad for Bitcoin? Do you think the prices of Bitcoin and other cryptocurrencies will go up even more in the next few days and weeks? Please let us know what you think about the video and Alden's talk below, and don't forget to give the video a thumbs up. If you want to see more movies, please subscribe to the channel and turn on post notifications.